Hello, everyone. This is Lance Mullen, and I am your host for today's episode. Today we have special guest and MSU alumni Paul Joyaux. Paul is a senior partner at RMB Capital and manages their office in St. Joseph, Michigan. Paul shares with us his journey in wealth management as well as how he serves his clients with his estate planning expertise. Enjoy. Okay, here we go. Welcome back, everyone, to the MSU WMA podcast. Today, I'm happy to introduce former MSU alumni, Paul Joyaux. Paul, it's nice to have you on.
Hey Lance, it's great to be here. It's great to be back involved in MSU. I'm happy to be part of your program today.
Yeah, we're happy to have you on. So do you want to kind of walk us through where you're at today and kind of how you got there from Michigan State?
Yeah, I think that would be great. I graduated from Michigan State in 1985, and I would say I graduated with an economics degree, and I had a series of maybe unremarkable career choices after that. I was in a variety of different sales roles, which I kind of enjoyed selling. I mean, that was certainly part of what I felt motivated me. And then I eventually went into the institutional fixed income business, specifically for bonds. And that taught me an immense amount about the stock market, the bond market, the financial markets. What was maybe lacking in that role was a real sense of helping clients, helping individuals, and I say that because the clients that I had in the institutional business, they know the same amount that you know. You know, your clients are portfolio managers of mutual fund companies, and there's really not as much value added, if you will. And
Yeah.
so I was in that industry for maybe 6 or 8 years, and I became disenfranchised and ultimately left to go to Payne Weber without really thinking what that would mean. I just said, I'm out of the institutional business. So I'm going to go into high net worth retail. I went to Payne Weber, and then I joined a group of 4 other employees there, which eventually became RMB Capital. And today, RMB Capital is, I think we have 10 locations around the country. We have maybe 150 employees, and we're overseeing or managing about 10 billion in assets. So understand, this is maybe in my mid 30s. I went from going to Payne Weber, where I really was unsure if I'd enjoy it or like it, to today I would say, I'm absolutely thriving. I love what I do, and I really enjoy helping clients.
Yeah. Do you want to kind of go maybe a little bit more in depth on what you do at RMB Capital? Maybe what like your day to day kind of looks like, or maybe what your favorite part is?
Sure. So the favorite part is easy. The favorite part is interacting with clients. But remember, in a 40 or 50-hour work week, your interaction with clients maybe at best is 10 hours a week or 15 hours a week. Much of the other time is busy work at the office, doing the things that have to be done. Today, I manage our Michigan office, which is in St. Joe, Michigan. We will soon have 10 employees in the office. So part of my responsibility is managing the office, and then I have probably close to 100 clients, which is, I would say that's the majority of my responsibility. And then there's another part of my responsibility, which is very important, which is training and developing the next generation of advisors within RMB.
Okay. Yeah, that's awesome. And so like with being a manager at RMB, and kind of taking over that role for the Michigan office. What are some of the challenges with that?
I would say, the biggest challenge has been COVID recently. In the last 3 years, COVID and the changing nature of the workforce and work from home, that's created unique challenges, I think, in every workforce. But it also creates unique opportunities. If we have challenges, other organizations have challenges, and if we can figure out a way to meet those challenges and turn them into opportunities, we'll hopefully progress faster and grow faster than our competitors.
Yeah, that is one of the biggest challenges that everyone faces.
Yeah.
So kind of jumping from there, um, what is your kind of niche for when you're um, helping your clients out during a meeting? What do you kind of specialize in or pride yourself in?
So that's kind of that's a great question, which requires a little bit of a longer answer. When I started in high net worth retail with this group of five of us, our average client size was maybe $250,000, and a $1 million client was a large client for us. When you think about those kinds of clients, they have needs that are maybe not quite as complex or sophisticated as larger clients. So again, I've been doing this for close to 25 years. Today, my focus, most of my clients, because I've been in the industry so long, most of my clients are in the 10 to $20 million range to the multiple hundreds of millions in terms of net worth. And so the focus becomes much more complex. It shifts. Certainly how they're invested and what we invest in matters, but there's a huge amount of focus on estate planning, tax planning, moving assets from the parents to the kids or to the grandkids, and doing this in a way that is efficient. And by using things like trusts or irrevocable trusts, you can make for a very orderly and efficient transfer. But we're also doing this because we attempt to avoid or reduce estate taxes.
Yeah, with the estate planning, do you want to kind of touch a little bit more in depth with that, to kind of help some of our listeners that maybe might not know a lot about estate planning or portfolio management?
Sure. So let's pretend all of us have 500 million dollar net worth. So we're either very fortunate with great parents, or we've
Yeah,
invented something and we have a $500 million net worth. And at some point, we're gonna pass away. We haven't solved that problem yet with technology, so we're all gonna die, and the 500 million is gonna move from me or my wife and I to my kids and grandkids today. And for the purposes of simplicity, I'm going to use approximate numbers. Today, we're able to pass 24 million adjusted for inflation. So today it's a little north of, I think, 25 and a half or 26 million. We can pass that amount to the kids. So that means if I have 500 million and 25 million goes estate tax free, what do you think happens to the other 475 million?
need help finding where that goes.
Well, it still goes to the kids if that's where I want it to go, but the 475 million could be taxed at 35 to 50%. So you will lose, call it 2 to 300 million, 2 to 250 million in estate taxes. Now, when you think about what does that client care about, you're a client of mine, you have $500 million. You care about the performance of the investments. Can you make 8%, or did you make 7%, or did you make 9%? But 1% of 500 million is what, $5 million, right?
Yeah,
So that matters.
quite a bit.
I mean, that's a big chunk of change. However, if I can avoid or reduce estate taxes, we're talking about saving 2 to 300 million.
Yeah,
So the order of magnitude of benefit of things like estate transfer, tax transfer planning, helping a client with estate setup, convincing a client. Lots of clients are unsure how to do this, how to accomplish this, how to reduce these taxes. Helping convince them how to do it and then implementing it is a huge part of my day-to-day and week-to-week with these higher net worth clients. And the other thing that's important to understand is the rules change all the time. Today, the exemption, the lifetime exemption, is around 25 million. That is supposed to get cut in half in January of 26. So suddenly somebody who has a $20 million estate that today won't pay any estate taxes, the lifetime exemption will go from 25 million to 12.5 million. Now they've got $7 or $8 million that's subject to a 50% tax. So the laws change all the time. Candidly, nobody knows exactly when they're going to die. You don't know how quickly your assets are going to grow. So if you have 20 million and spend 2 million a year, you're going to deplete the assets, right? So you may not have an estate tax burden. If you have 20 million and spend 100 grand a year, your portfolio is going to, and you live long enough, your 20 million is going to grow to 40 million, and then 60 million. So estate planning and understand in the industry, Lance, if you start out in wealth management in a year or two when you graduate, you're not going to be doing this right away, but you can partner with senior people like me in whatever organization you join. You should partner with senior people so you have exposure to both entry-level clients, people that may have a $500,000 or $1 million, but as well as what I think is a super fascinating part of our industry where you're doing way more to help and support the client as opposed to just investment performance, right?
Mm-hmm. So you mentioned how the tax rates and the lifetime guarantee are always changing with politics and stuff like that. How do you kind of navigate that when your client right now has a $25 million cap, but then in a couple of years it's going to be cut in half? How do you navigate that?
Well, you have to spend time. You start by educating the client. And remember, estate planning attorneys do this as well, but estate planning attorneys charge by the hour, which is great. I mean, that's how they're supposed to work. Most advisors in our industry are just charging a fee based on the assets we manage. So we can spend time. I feel it's our responsibility to spend a lot of time with clients, educating them, helping them understand what their options are. And for the most part, this is all part of the fee that we charge. So there's not an incremental fee to engage with a client and to talk about estates and how they work and what the benefit of this is. So we spend a lot of time with clients educating them. That's where it starts, educating them on how this works, what the taxes are. And then you just have to make reasonable assumptions. If I go back to the prior example, if somebody has 20 million and we think they're going to spend a lot, we may say, don't do anything right now. If somebody has 20 million and they're only spending 100 or 200 grand a year, we can help them understand that their portfolio, and I always draw this on a line. I have a chart that I draw.
Okay.
Their portfolio is 20 million today, and it's going to grow to 40 to 60, right?
Yep.
I show the clients something like that. It's drawn better, than what I did here.
Yep,
but
you can see it.
You help somebody understand if they're 50 years old and they're fortunate enough to have this amount of money, what could it grow to? Nobody knows for sure. And then they start to make choices that say, yeah, maybe I should do something sooner. And something sooner typically means you're going to set up an irrevocable trust. You're going to take some of the 20 million that you have and move it into an irrevocable trust for the benefit of your kids or grandkids. And when you do that, what happens is let's say you put 10 million in an irrevocable trust, the 10 million is now growing out of the estate. So if the 10 million by the time you pass away grows to 40 million or grows to 20 million, all of that is not part of the estate, right? So, and by the way, this is just one tool. There are lots of other
Yeah.
tools that the industry uses to help with these transfer taxes.
Yeah, that's definitely a huge piece to the estate and kind of helping a client know that their assets aren't just going to be thrown to the government where a lot of people might not agree with what is going to be allocated to. So passing it down to the kids is always a lot of things that people take pride in. Um, Usually when you're working with estate clients, do you often work with the children as well and the beneficiaries?
Yeah, the kids, uh, yeah, so especially higher net worth. I'm thinking about a family that I work with today. We have already moved. So the parents are in the mid 60s, the kids are in the 30s. The kids already have a net worth of 40 million, which was largely money that was
Hmm.
moved from the parents to the kids. But the grandkids, who are, in the 3 to 10-year-old range,
Yeah.
the grandkids have portfolios that are already a million plus. So it's a never-ending process of taking that money and pushing it, estate tax
Yeah.
free to other family members, right? Um,
Hmm.
the other thing, not only can you do irrevocable trusts and all kinds of more sophisticated tools, but you can also move. You're allowed to do an annual exemption. So this resets every year. So everyone, me, you, everybody can give individually 17,000 to your children or anyone else a year. Now that doesn't seem like a lot of money, but in the case of the family that I'm referring to, it's 17,000 per married couple. So the husband moves
Hmm.
17, the wife moves 17. You have, let's pretend you have 6 kids. So that's 6 kids times 34,000 that you move once a year. And then you
Hmm.
have 10 grandkids. So that's 10 times 34,000. So
Okay.
the annual amount you can transfer, it can be hundreds of thousands of dollars a year if you have enough
Yeah.
kids.
Yeah, that adds up and that is really a good wealth building tool. Um, I kind of want to jump into kind of more of like the portfolio management that you do now. Um, so with 2022, a lot of people know like we started to enter a recession, a little bit of a downturn compared to 2021. How did you kind of navigate that with some of your lower AUM clients compared to your higher AUM clients?
Well, the one thing that I would say that is relevant, regardless of client size, is you have to make sure that clients can sustain a downturn. And what I mean by that is we know most years the stock market is positive and the bond market is positive. Yet we also know you're never going to not have a market downturn, right?
Hmm.
Lance, you're young enough that I would imagine you will experience 10 to 20, 40 to 50% stock market declines over the rest of your life,
For sure.
or 25 to 50% stock market declines. So the worst thing you can do is stocks fall 25 or 50% and you need the money and you take the money out. And then you
Hmm.
miss the recovery, right? The
Yeah.
best thing you can do is the market declines and you figure out a way to add more to stocks and then you recover faster. So the most important thing is making sure that people have staying power, that they have cash or some other safe instrument that that will last them a year or two, maybe even longer, depending on who they are,
Yeah.
so that they can access the cash and they're never forced to sell stocks after they've declined. And that's true whether you have $10,000 and you're starting out or you have $1 billion. It's
Hmm.
important to have this this staying power. So that's what we focus on. And then after that, you work on what does the investment portfolio look like? Do you want a really aggressive portfolio? Do you want a conservative portfolio? It's also important to focus on everything. In other words, if we're engaging a client, and it really doesn't matter how much money the client has, it's not enough to just manage the money that the client gives us to manage, right? A client might give us $100,000 to invest, but what if the client has $500,000 in a 401k? What if the client is a corporate executive and has $1 million of company stock and has other benefit plans within the company? As an advisor, you want to help coordinate on all of that. You want to talk about the big picture, right? And in fact, in our view, that should be everyone's goal as an advisor. You want to migrate to the top level with the client and talk about big picture, all the way down. You don't want to talk about, I just put $5,000 in a Roth IRA. What are we going to do with that? You have to start at the top and work down. So, you're right. The market has been a challenge the last year. Some things are already better this year, but who's to say whether stocks will perform positively or negatively this year? So you just have to have a long-term plan to account for the fact that you can't really predict with accuracy short-term 1 to 2 year returns.
Yeah, for sure. And when you're kind of explaining that to clients, how do you make sure that they know, hey, if the stock market or my returns aren't good for a 1 year, I'm still okay? Or maybe they are in a little bit of a situation and they start to freak out. What do you kind of do to calm them down?
It starts with, and it's almost always education, right? Even if we had a brand new client that just started with us in 2022 and their first year was negative, we could show them the history of bond and stock market returns going back 30, 40, 50 years. And it's very easy to say, look, here are out of 40 years, here are 10 years that are negative as an example. Here are 40 years that are positive. History will repeat itself. You will experience way fewer. I mean, this is almost always going to be the case. This is what I actually would guarantee investors. You will experience way fewer negative years than positive years. And the positive years are almost always way more positive in magnitude than fewer number of negative years. So, it's really just a question of time. If you can stay invested for as long as possible, you should do really, really well.
Yeah, I totally agree. And I think education is probably the biggest thing when you're working with clients. I think that when they know that you're helping them out and you know what you're talking about, they really have that confidence that you're going to make them succeed. So I think that's a huge part of that. Just kind of jumping topics a little bit. I know we have a lot of students that listen to our podcast and really benefit from some of the guests that we have on. Do you have any advice for students, maybe entering a little bit of the estate planning or portfolio management?
If you want to get in this career, in this space, there are great organizations you can join. You can go with large firms like UBS, by the way. So when we created our firm, UBS had bought Payne Weber, so we ultimately left UBS. So you can go with big firms like UBS, Merrill, Goldman Sachs, et cetera. They have their unique strengths. But you can also look at firms like ours, which are registered investment advisors. And there are great lists. There are lists that are, as an example, what are the top 100 registered investment advisors in the United States? And I think we've been on that list for 10 years. But you can find those lists and find firms that are in the area that you want to be in. So, not everybody wants to move to St. Joe, Michigan. Maybe you want to move to Chicago. It's pretty
Hmm.
easy to find a list of the top firms in Chicago, reach out to them, use LinkedIn or other tools, um, reach out to them and talk about how you could either get an internship or learn, from people within the organization, learn about career opportunities.
Okay. Yeah, I think that's great advice. Um, do you know if there's any opportunities within R&B, like you said, and through Chicago for maybe students to reach out to you with that?
Yeah, great question. I'm always delighted to have students reach out to me. And I've talked to a number of students at Michigan State University, and I really enjoy that. We do have a website that you should go to, and I believe I would say we're currently hiring, but guess what? Even when we're not hiring, we're hiring a month later, right?
Yeah.
And that's true of everybody in the industry. You don't hire for 3 months and then you hire later. So don't take whether it's RMB Capital or some other firm that you're really interested in. Um, don't worry about the fact that if you like the firm, don't worry about the fact that they're not hiring today.
Hmm.
Because my assumption is if they're growing, they'll be hiring in a month or they'll be hiring in 6 months. So keep that in mind. Definitely reach out to me. Definitely look at our website. We have an internship program every year. I think the internship program for this coming summer is already filled. But we have a great internship program. And even if it's not the internship program, I'm still delighted to help anybody talk about the industry and opportunities that exist within the industry. I would say one thing though about this industry: um, the people that really succeed, it, it's it is not as much understanding finance as it is understanding human behavior. Um, I would not be good at what I do if all I understood was here's how your portfolio works.
Hmm.
We become good in the industry because we're good at developing relationships with clients. We're highly motivated to support and help our clients, and that's the magic in the industry. So
Yeah.
you absolutely do not have to be a finance major to get in the industry. You have to be able to prove that you're excited to help people, you want to work with people, and you get a strong sense of accomplishment because you are supporting someone in some of the most important activities and actions that occur within their lives. Picking
Yeah.
stocks, stocks selection, security selection. I haven't done any of that for 20 or 30 years. In fact, I don't think I ever did that, right? So
Yep.
security selection for a wealth advisor in a way is not that important.
So would you say, I like how you touched on kind of the relationship part. Would you say that kind of the relationship part of the business is kind of what led to your success, or what was
Yeah,
the biggest part of your success?
that was the biggest part of my success. Candidly, I never really understood that I might be good at it. I never really understood how important it was. I think when you start out in the industry, you have this sense of the most important thing is strong returns and performance. It's really not. It's really how well do you interact with a client? How well do they trust you? And can you build a really strong personal connection? Because this strong personal connection with the client is what leads to the ability to deliver all these other value propositions: estate planning, tax planning, you name it. If the client doesn't trust you, like you, and believe in what you're trying to do, they're never going to listen to anything you have to say, right? So if
Hmm.
you don't have that level of trust and the strength of the relationship, all the rest of the things will never matter.
Yeah, I really like that. And so, kind of where you're at right now, do you kind of see yourself continuing where you're at, or maybe transitioning within the estate planning or wealth wealth management industry?
I guess I'm in more of a senior role within the company, and I really like what I do, and I will probably do this for the foreseeable future. That's the other thing in our industry. Someday I may slow down, which means maybe I'll have fewer clients, or maybe I won't be a manager anymore, and I'll let the younger generation, take over and start to manage things. So I'll definitely slow down at some point in the future, but I could be doing this when I'm 70 years old, 75 years old. I really enjoy it. I see no reason to stop doing it. Um, and I have some of the most amazing clients and friendships
Hmm.
in the world. So I just don't know why I would ever choose to give that up.
Yeah, that's awesome to hear. I know a lot of people are kind of entering this industry because of that and that kind of benefit of being able to do this for a long time, as well as really enjoy doing it and make a big impact on others and friends and family. Just kind of closing up, do you have any maybe content or learning material that you would recommend for students?
Um, I think we publish a lot of information for clients. I'm not totally sure that we share how we share that with the rest of the community. I do have materials. Again, if somebody wants to reach out to me, we do have materials that I think would be of interest that we can share. We host a frequent number of seminars for clients. I think some of those are recorded, so we might be able to share that as well.
Okay. Yeah, and I will put the your contact info in the description below. So if someone wants to reach out to you, we'll have that available for them. But thanks
Great.
for coming
I
on,
would be delighted.
Paul. Awesome. Yeah, thanks for coming on. We really enjoyed having you. It's good to have you back in the Sparty alum category, and we hope to see you around a lot more now.
All right, Lance, thanks so much, and I'm happy to be here and happy to help.
Yep. Thanks again, Paul.
If you like what you just heard, please like, comment, and share. This is Lance Mullen, producer of the MSU WMA podcast. MSU WMA, or Michigan State University Wealth Management Association, is a student organization part of the Eli Broad College of Business, located in East Lansing, Michigan. Our mission is to inspire and educate the next generation of financial planners. Thank you for listening to today's episode. If you enjoyed, please check out our channel on all platforms such as Spotify and Apple Podcasts, and check out our social media at MSUWMA and MSUWMA.com.